about this before.
Yes,
you told me about it
I
after
did.
the fact. We would have come to tell them all about our reforms next time.
Okay, next time actually. So for example, there is what they call the collateral registry.
That's a PEBEC reform.
Yes. And there were a lot of MSME owners in the room.
Yeah.
And they actually said there was no collateral. They don't know about
it.
They
don't know about it.
Something like that.
Yes.
So it got me. I had to, like, a lot of people don't have information. Is it that this, like, for instance, the state governments are not communicating, or they are not communicating well, or they are not communicating the language that their people understand?
Communication is never enough. That's why we speak so much. Collateral registry, excellent intervention by the central bank, had been on. It needed legislation. So we worked with the central bank, with the National Assembly to push that. We also worked on credit bureaus. Those are two reforms. That year, Nigeria ended up ranked number 6 in the world for our enabling environment on access to credit. But the manifestation, the implementation of that, still the financial institutions giving out the actual credit, even though the government has put in place an enabled environment, didn't quite happen. So with collateral registry, we have to keep communicating. We even, in our PEBEC play, we even put that in there, that those are some of the things that businesses don't know about. Some businesses still don't know that you can register a business online, that you can file and pay your taxes online.
That you can even be the only owner.
That you can be the only owner.
Anymore.
All the CAMA reforms. Talk less, we haven't talked about all our Business Facilitation Act reforms. We haven't talked about, there's been quite a bit. So we know the importance of communicating, if not all this work by all the MDAs, by the National Assembly, our small claims court. If we don't keep speaking about these things, they remain on the shelf.
Okay, Dr. J, I'm looking at our time because I have another guest, and I hope I can have you here again. We will talk about that. I will have you here again soon. The Business Facilitation Act, which the President signed just recently, I would like you to speak about that and how you think that might likely impact the EODB, that is the ease of doing business, as well as even some of the constitutional amendment bills that the President said, like electricity, that states can now generate their electricity, even have their own railway. How do you see it playing out, especially in states? Then the top part of my question is, sorry, Dr. J, is that for this ranking now, have states been in contact with your office as to, oh, doctor, I'm seeing that our position has gone down. What have we done? Or are you only getting calls from the good guys on the list?
No, we had a 2-hour technical deep dive on Monday as the report was launched, as it was released. We gave a few hours for our simulation, and then from 3 to 5, we were all on a call, a Zoom meeting, over 100 participants. We've been working very closely with our colleagues at the subnational level, so it's not really a surprise. We took all the feedback from 2021. We had even a retreat here in Abuja, which the PEBEC did sponsor, and we got all our colleagues here so that we could get to know each other and speak and plan. You know how hard we worked with SABA, that's with Honorable Commissioners of Finance especially, and their teams. So we're not strangers to each other. They didn't just see this in the report. Some of these challenges, they know about it already. Some have come to the fore and they're already working on it. But sometimes there's a lag between working on it and your stakeholders knowing that something has been done or that you're working on it, which speaks to communication again. With issues like electricity, speaking to the infrastructure challenge and how big it is, and security and secure and stable environment, those pop up like excavated ease of doing business challenges. With this constitutional amendment, now on the concurrent list, states have asked for a long time to be able to have power, to be able to generate their own power real. So this is a good move in the right direction. Years ago, Lagos tried with ESCOM and couldn't close that deal. Now those sorts of deals. So even decentralized power, solar projects, IPPs, but at a larger scale, it's also an opportunity to get investors in. So that it amends 21 pieces of legislation, varied. This was based on almost 5 years of work with private sector, Section of Business Law, Nigerian Bar Association, over 40 law firms volunteered pro bono, National Economic Summit Group, and NASPA from National Assembly. Of course, Ministry of Justice. A lot of hard work pulling all that together for private sector. importantly, it codifies EO1, which is the first executive order of this administration. So all the directives, like having a single interface at the ports, all the directives about the airports, the seaports, interfaces between government, service levels agreements are now legally binding on the government. So a lot for private sector to take in and to deploy.
Dr. Jumoke, you know, having you all here all the time, we can as well go the long haul, 1 hour. I will still be talking, but we have to end at this point. I will have you soon. We'll talk about that later. Thank you very much for coming.
You're welcome.
All right, I've been speaking with Dr. Jumoke Oduwale, who is the special advisor to President Muhammadu Buhari on the ease of doing business. Let's quickly take a break to bring in my second guest, Dr. Hassan Mahmood. Is the Director of Monetary Policy Department at the Central Bank of Nigeria, where we'll be talking about another issue, talking about interest rates that was hiked last week by the Central Bank MPC. We'll be looking at that and more.
Here is a new and refreshing offer for our esteemed audience across the globe. The new AIT Cloud TV is an online streaming service that offers you attractive opportunities to view our rich, exciting, and entertaining programs anytime, Ku and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV. TV on the go.
All right, welcome back to the program. Dr. Hassan Mahmood joins me now. He's the Director of Monetary Policy Department at the Central Bank of Nigeria. Dr. Mahmood, good to have you again. Let's get started. We have a lot to chew in the next few minutes. But let me start by asking, since the interest rates decision announcement last Tuesday, I guess, yes. What have you and your colleagues found out, especially like in your department, and in your department precisely? Have you been able to coalesce the feedback from private sector, for example, and from other stakeholders in terms of this MPR raised to 18% will increase borrowing cost? What have you people crystallized and looked
for having me? Well, normally before the MPC, that's what we call business or market survey, where we collect sentiments of investors, businesses, producers. We call them PMIs, Purchasing Managers Index. Yes, to know what is the sentiment in the market, what is their perception of the impact of monetary policy, and what will they expect monetary policy to do in the periods ahead, because they price that into their current decision processes. Now, so when we have those results, we build them into monetary policy input that monetary policy members use for their decision. We've seen from there, and there's another important variable that we get from there, or parameter we get from there, we call the expected inflation index, where this group of people, investors, producers, also give a direction of where they think central bank inflation numbers will go. This inflation expectation is also built to the models for determinants of inflation. And what we see there is that sentiment plays a major role in terms of how the inflation number behaves. Because don't forget that inflation is just a record of the prices. So when they think central bank will not be able to bring down inflation number will be high, they will need to price up so that they can improve their disposable income or their gains, profit on that business, and that will mean inflation numbers are going up, not because the goods are scarce or the supply has reduced, but because of this expectation is high. And that's why you also see central banks now, including Central Bank of Nigeria, built-in inflation, forward guidance in their analysis. So from the last MPC that we tightened to 18% to now, which is just 1 week, maybe in the money market we'll have seen the behavior of rates.
We've seen that, exactly.
Yes.
And even the equity market too.
We've seen
going
that
down.
Yeah, but that will be too early to call. We'll have to look at that over the period. We still have another 8 weeks before before the next MPC, but immediately you will see some reactionary behavior within the market. Rates are already picking up significantly, and that will mean cost of transaction among banks will have also gone up. So that is a signal that yes, liquidity is tight, or cost of fund is a lot higher. That will translate to other lending rates within the economy.
At the last,
seen it.
Yes, at the last MPC meeting, I don't know if stagflation was actually looked at. Stagflation being unemployment as well as rising unemployment rate and rising inflation rate. What is the calibration of the MPC concerning Nigeria's stagflation?
Well, we are seeing rising inflation rates in a period of declining output growth. However, our consolation is the fact that the rate of decline in GDP growth is a bit moderate. Since after COVID, that is 2021, when we came out of recession, I think.
No, we came out of recession last quarter of 2020.
2020,
yes.
Same year?
Yes, same year.
Okay, so since we got out of recession and we started posting positive growth in 2021, quarter on quarter or year on year, annualized, we've had positive growth. We've stayed around 3%. Last year or last quarter, we are looking at 2.25%, which was a decline compared to 3%. But it's also projected that 2022 will end around 3%. So if you see that, we can say yes, output growth is declining, but not to a level where you are seeing inflation numbers going up and the economy is in recession. That's the real stagflation that we are more concerned about. So yes, it's tightening, liquidity is, cost of fund is a lot higher, credit growth is not necessarily declining sharply, because we still see some of central bank intervention playing a big role in that space. But the growth is because central bank also came to a point that we've been looking at this growth for a long time, unemployment, and then neglecting or not giving more attention to inflation, which will eventually even wipe up the gains of the growth or the employment. Because even if your employer, your disposable income is declining month on month, then at the end of it, you will still not be able to meet your daily needs. So there was a shift, deliberate shift, to focus on inflation significantly, given that other monetary factors were driving inflation. So we saw that move to taming inflation being the priority, and then also by the side looking at growth. So stagflation is not really glaring now, in the sense that growth is still positive, even though declining a bit marginally, which is a global phenomenon. Some economies have actually recorded 2 consecutive quarters of negative growth, including the United States, but we've not got to that stage. So yes, inflation numbers are rising month on month, and even that month on month, the rate of growth of inflation, like I said the last time, is still also moderating. So we see that turning out. We see that the rate hike that we're doing is also narrowing the real interest rate gap, negative real interest rate gap that we have between inflation and our MPR. We're also narrowing that, which means that we're able to raise more resources in the domestic economy to drive further growth.
Okay, so the MPC is basically holding this pattern of raising interest rates until what happens really? Because in the next, the last 5 meetings, interest rates have been high. So you're raising this pattern until what will bail the cat that will make you perhaps even reduce interest rates, that will also reduce borrowing costs. And let me also situate it this way. I would really like to know how the MPC will transition, especially this year, because I know that your posture in 2021 was that of